What's up, everyone? It's Scotty with MoneyVest. So markets here more or less flat on the day, with Nvidia just popping higher after hours, up a little bit over 9% on the back of yet another record quarter for the company. And the futures are once again pushing higher very nicely, with lifting the entire market back up after a couple days of weakness and selling pressure. So hope you all enjoyed this video and find it helpful. Make sure that you drop a like, and don't forget to subscribe to the channel if you're just joining us for the first time. And again, links to our Discord and Patreon is also going to be down below if you're interested in joining us. And of course, getting access to all the members only private videos. You got Excel spreadsheets for you to take advantage of, and everything. All of this is going to be moving over to our website, moneyvest.com. Very soon. The early beta access is going to be available for all the members, and that is going to be available in March. And on top of that, you obviously do get over 46 plus private members only videos, Discord access, including trade alerts, trade ideas, buy and sell alerts, options alerts. Everything is going to be available, as well as our Excel spreadsheet. And do also connect with me on Instagram. My handle is going to be CastWRP. If you want to, again, look at my stories, personal stuff, portfolio updates, polls and strategies and tips and all that stuff, I also do post over there as well. So markets here, NASDAQ pushing down a little bit over 30 basis points, S&P up 13 basis points, Dow Jones also pushing up 13 basis points. So more or less a very flat day in the markets here. So Google pushing up, Amazon pushing up, Apple pushing up, Nvidia here down on the day, however, rallying and ripping higher after hours, up over 9%. We're going to take a look at the earnings here in just a minute with yet another record quarter. And this right here is the entire market. So again, majority of sectors, green energy leading the way, utilities, cyclicals, real estate, communication services, all of them pushing higher, with technology kind of selling off. But after hours, as we already know, Nvidia kind of lifted the entire market back up and brought it back to life. In the last 1 week, again, technology has been one of the sectors that has underperformed. Every other sector is up at least 1.5%, close to 3%. In the last 1 month, every sector is up. 10 out of 11 sectors are green, except for real estate, which is still struggling a little bit. Cocoa prices, we got Nikkei, we got NASDAQ, heating oil, coffee prices all pushing higher, with orange juice and volatility down. Bitcoin here just a little bit over 51,000, Ether just under $3,000 at the moment. Now, Nvidia post revenues up 265% on booming AI business. I will be doing a more separate, more dedicated video on Nvidia here fairly soon. But this right here were the numbers. Earnings per share coming in at $5.16 versus $4.64, and I think that number is also up over 700% on a year-over-year basis. Revenue coming in at just over $22 billion, the expected $20.6 billion, so strong beats on both sides for Nvidia, with expectations at $24 billion in the current quarter. Analysts were expecting about $5 per share and $22 billion in sales for the company. And Nvidia, of course, has been a huge primary beneficiary of generative AI and the amount of sales that we've seen for their GPUs, and the obsession with large artificial intelligence models, which are developed on the company's pricey graphics processors for servers. And Jensen Huang also did address investors' fears that the company may not be able to keep up this growth or level of sales for the whole year on call with the analysts. He says, and I quote, "Fundamentally, the conditions are excellent for continued growth in 2025 and beyond." He says demand for companies' GPUs will remain high due to generative AI and the industry-wide shift away from central processors to the accelerators that Nvidia makes. Nvidia reported $12.29 billion in net income during the quarter, $4.93 per share, up 769% versus last year's $1.4 billion or 57 cents per share for the company. So this is just an astronomical growth. This is the type of growth rates that investors and analysts kind of drool over, and the rightly so move after hours of 9% increase in the share price. Nvidia's total revenue also rose 265% based on strong sales for AI chips for servers, particularly the company's Hopper chips, such as the H100. It said, and the strong demand was driven by enterprise software and consumer internet applications and multiple industry verticals, including automotive, financial services, and healthcare as well. I will be doing a separate, more dedicated video on Nvidia very soon, but this right here is what the chart looks like on the 4 hours. Massive breakout to the upside, back over $735, pretty much trading at an all-time high once again, but getting tapped out at that resistance. It's kind of interesting that we had a resistance at 745 and it's been getting rejected at that resistance since the middle of February. So this right here, rejection, 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 and this right here, once again, is that resistance where we are getting rejected once again after hours. So tomorrow is going to be quite interesting for us to see whether we get rejected here, whether we get a further breakout and that continuation of that momentum forward. Now, we also did have the FOMC members minutes today, and the Fed officials did express caution about lowering interest rates too quickly at the last meeting, which I think is very normal, very sort of a concern that many people do have, because inflation is a little bit more reluctant to come down. It's still a little bit more elevated here at well over 3-4%, twice as much as the Fed's target. And even though unanimously the Fed officials have agreed to cut interest rates at some point this year, there's still uncertain or not on the same page when it comes to when those rate cuts will happen or how many those rate cuts will happen. So most participants noted the risks of moving too quickly to ease the stance of policy and emphasized the importance of carefully assessing incoming data in judging whether inflation is moving down sustainably to 2% or not. Now, one thing I want to point out that I think a lot of people don't understand is that the risk of doing too quickly is far greater than the risk of doing too late. And a lot of people may not realize that early on. And what I mean by that is that, let's say the Federal Reserve cuts interest rates tomorrow, right? And in reality, let's just say that that's too soon because inflation is not near 2% or below 2% just yet. So the risk of doing too soon, so in other words, if the Federal Reserve cuts interest rates tomorrow and inflation skyrockets back higher, is on the long term far greater than for the Federal Reserve to wait and for inflation to come down, or even the economy to start to weaken, and then the Federal Reserve can cut interest rates. Because the process of increasing interest rates is a lot slower than the process of cutting interest rates, which is a lot faster. So if you understand that logic, you will understand where the Federal Reserve and where Jerome Powell is coming from. They'd much rather go slowly than too fast, because going too fast risks inflation accelerating back up and for the situation to get much worse long term than going too slow, because of course at the end of the day all they'll have to do is fix a recession, which they can do by lowering interest rates. But fixing high levels of inflation will take, once again, a lot of time, because they'll have to spread out these hikes over a period of time versus fixing a recession where they can cut interest rates fairly quickly. So that is one thing that we have to understand, that the risk of doing too soon, too quickly is far greater than the risk of doing too late. And they would much rather do too late than they would do too early. And that is exactly what I think how the members are thinking about it. So questions over how quickly to move. Participants highlighted the uncertainty associated with how long a restrictive monetary policy stance would need to be maintained. Officials remained concerned that elevated inflation continued to harm households, especially those with limited means to absorb higher prices. And while the inflation data had indicated significant disinflation in the second half of last year, participants observed that they would be carefully assessing incoming data and judging whether inflation was moving down sustainably towards 2% or not. And that's exactly, I think, the whole idea is that they want inflation down to 2% and they want to wait for see that data come in stronger and then make a judgment along the way. Now, when it comes to crude oil, $78 is where we're at. Just a lot of consolidation. Resistance is going to stay put at $79, close to $80 per barrel. Support level is going to stay put at $70, $73 per barrel here. So lots of consolidation sideways in that range for crude oil. And we got volatility here, seeing a little bit of that momentum back up. So it's sitting at just over 15. So right now we're a little bit closer to above this sort of red line, which is the resistance at close to 15. So the moment it gets up to 18 or 20 to even higher as high as 36, 37, 40 is when we will start to kind of look into it a little bit more closely. And we'd be very, very interested in dollar cost averaging and, of course, be very aggressive in the market to turn that dial to start deploying cash even further. Ether just a little bit under 3,000, as we've already discussed. Bitcoin just over $51,000. So lots of consolidation at that resistance, which indeed is now going to be a support to watch for crypto. So for Bitcoin, this is actually going to be a support level moving forward, and that next target and resistance is going to be closer to $70,000. That's pretty much going to be the new all-time high for crypto for Bitcoin moving forward as well. So that is going to be those next targets to keep in mind. Now, next up, we're going to take a look at S&P and, of course, the NASDAQ. So S&P 500 here, basically flat on the day, so lots of consolidation. And I believe after hours, we did see a lot of momentum back up for the entire market. So SPY after hours pushed up 75 basis points. So recovered really, really well, back over $500 per share. And QQQs, the NASDAQ here, also pushing higher very nicely, up a little bit over 1.3% after hours after NVIDIA reported their earnings. So all in all, I think the markets are looking for a very strong start to the day tomorrow. And again, futures are very, very green. So this is obviously going to be quite an interesting day, whether this momentum carries forward or whether we see some type of profit taking or some type of selling intraday. But But right now, pre-market, most stocks are ripping higher back up. Apple was up 36 basis points. And this right here is the entire analysis where we already understand that 180 is going to be a very strong support. RSI MACD also looks pretty solid for us to see that momentum back up, and a very, very important resistance staying all the way up to 189, close to $190 for Apple. So this right here, along with those moving averages and that resistance, is going to be the one to watch for Apple at the moment. Talking about Amazon, Amazon also here pushing higher after hours, up a little bit over 1%. So lots of consolidation sideways, but back over 170. Resistance going to be all the way up to 176 for Amazon, with a little bit of a gap to fill here for Amazon. So again, just a lot of consolidation sideways in that range between 176 and 165 for Amazon. Talking a little bit about Tesla, and Tesla here also on the day. Selling off, I believe it was down. I will be doing a separate video on Tesla as well, but a lot of consolidation sideways, as we have already discussed. It's just been going back and forth in between that $190 to $200 range, getting rejected at that resistance at 201, 202, and support level is going to stay put at 179, close to $180 per share for Tesla. Going over to NVIDIA now, and NVIDIA, as you already know, massive rip higher after hours, up over 9% here, back up to almost at an all-time high here, but 745 going in tomorrow is going to be that resistance, and support level is going to stay put roughly at around here at 635, 640. And again, we'll find out if NVIDIA has what it takes to continue that momentum higher, if it's going to break out on these record revenues and earnings, or if it's going to get rejected here at those levels. But 745, very important resistance level to watch going into tomorrow. Advanced Micro Devices also ripping up 4% after hours here, so very, very nice move to the upside. Resistance is going to stay put all the way up to 185 to as much as $181 per share. So a couple resistance levels to keep in mind for AMD. So as we have already pointed out, a little bit of that symmetrical triangle, we tried to break out, then we sold right back down. So lots of consolidation in that range for AMD between that 159, 160 to 180 level to as much as 185 for Advanced Micro Devices as well. Talking about Meta platforms, and Meta here on the day also slightly down, but pushing higher after hours, up over 1.4, 1.5%. Resistance, as we've already discussed, is going to stay put right over here. That's the all-time high at 488, and support level is going to stay put roughly at 452. That's the range within which it's been trading. So you can see that it's been consolidating sideways in that range for quite some time. Talking about Netflix here, and Netflix on the day also pushing down slightly, about 30 basis points, but coming down to that support here very nicely, which old resistance acting as a new support for Netflix at the moment. So 571, 572 is going to be that support with a resistance all the way up to as much as $600 per share. That's going to be a new 52-week high for Netflix as well. Talking about Google and Microsoft, and Google here on the day also slightly up 1%, and after hours up even more, over 1%. So pushing back up the RSI and the MACD. Resistance is going to stay put all the way up to 151 for Google, with the support level staying inside this green rectangle for Google as well. So lots of consolidation sideways, and support level, like I said, it's going to stay put roughly at 140, 144. Resistance all the way up to 150 for Google. Talking about Microsoft, and Microsoft here also pushing higher after hours. Again, every single stock here that we've covered was up after hours on the back of NVIDIA's earnings, and it's also bouncing off of this higher low, which again, we've talked about this uptrending channel of higher highs and higher lows. So this right here is the overall uptrending channel here. Support level is going to stay put right over here at this higher low, and next resistance and targets going to be all the way back up to that $420, $421 resistance for Microsoft moving forward. So that is going to be the one to watch, with the RSI MACD also showing very good signs of that potential rally back up for Microsoft. And last but not least, we're going to quickly go over Enphase, and Enphase here on the day also up after hours. Actually, on the day, it got bought up here fairly quickly. But let's take a look at after hours here, where it's trading. 126 is where it's closed on the day, but after hours on the 4-hour chart, pushing up about 60 basis points up to 127. So again, not a huge move to the upside, but support level is going to stay put in the 120s. So inside this green rectangle, and resistance back up to 138, 140 for Enphase as well. So hope you all enjoyed this video and a complete update on the markets here. Bottom line is that, as I've mentioned before, the Federal Reserve is going to move very, very cautiously, and the risk of doing too soon is far greater than the risk of doing too late. And that's exactly why I think there's a unanimous decision that rate cuts are coming, but the timing of those rate cuts is still a question mark. The amount of rate cuts is still a question mark, and that's exactly what the market's trying to understand and gauge. And when exactly is the Federal Reserve going to pivot their policy and start quantitative easing once again? And that's only when either inflation's back down to 2%, or it's on its way down to 2%, or there is some weakness in the economy, there is some recession signals, there's unemployment that's going up. All these are going to play a significant role in the Federal Reserve's decision of cutting interest rates. So hope you all enjoyed this video, found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel. Again, links to our Discord and Patreon is going to be down below if you want to join and be a part of our MoneyVest community. Everything is going to be available on our moneyvest.com website here fairly soon. So you will, as a member, have early access to the beta launch that's going to be available. And as always, happy investing, and I'll see you all in the next video.